Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. Let's do the same and take it right to the charts, shall we? Bada bing, bada boom. Here we go. So as you see, we did have a large move to the upside as predicted, and we reclaimed this 618 level and started to make our way up to the 786 region after breaking through the 0.65 and the 706, and we stalled out there for a little bit. We took profits on the morning stream, and then we left that runner to run to its fruition, and we are currently in a small little baby short, not full porting or anything like that, just kind of testing the waters of this thing. And somebody was asking about history, so yeah, this is the last 90 days of trades. The last loser was in February 15th, but we've been on kind of a run here, so that's good. So yeah, anyway, let's go ahead and take a look here where we are at on this fib retracement tool. If you take this retrace all the way down to the bottom here and you are getting rejected at the 706 region of this 4-hour retrace down to from top to bottom here, if we see this retrace in effect, we could be going down into the other regions below. What are the regions below? Well, we got to look at the heat map for that to see where the liquidity lies. What is the heat map? Well, it's when people lock their liquidity in the charts and refuse to use a stop loss and get burnt to a crisp by the market maker. So let's go see who's in the charts today, shall we? Shout out to everyone here. Yo, yo, yo. So let's go take a look. It is possible to be consistent with trading, by the way, so I hope you guys are enjoying yourselves and taking it easy as you trade. So here we go. If you go to this move to the upside, we have these pools below us, 309 million at 29.26. This previous bubble here at 309 million at 29.57 got knocked out on this dip down here, and we bounced off that liquidity, and the shorts are contemplating whether to open or not, and there's more longs opening here as we see these bands down below. 28.66 is a juicy region. We have a 100x guy down at 28.52. That 100x guy could be a juicy target alongside their compatriots here at 28.21 and 27.64. Although I'm gonna mark off this 28.52 character in my chart real quick. Give me a second here. 28.52. One more time, just for the record. 28.52, 100x long. 28.52. So that comes back to this daily support resistance flip idea. This bubble we talked about the other day got taken out and they went higher from there. So let's see, do they retrace into this region? The 618 would warrant something down here, but at the very minimum, bare minimum, like let's just say we go from here to here, but let's just do the full length of the journey here. But this is one little bubble here at 28.52 they said, so 28.52. 52, right? Let's see. 28.52. So we're gonna just mark that off a little bit. That's a 100x little pool there, and we're gonna see what else is in here. Go into the minutia here. That 100x previously got knocked out. We have another 50x down at 29.26, 309 million. $29.26. Let's just leave it there like that. So those are some 50x pools. So that's what these vector candles represent. They're repricing the filled with volume here, and these repricing, you have 3 green vectors, and you can expect probably a stop hunt rise and eat into this liquidity here. I might just set my stop into profit because the blue vector candle hasn't appeared. What is a blue vector candle? Well, it's like these candles here. These blue vectors end up being stop hunt volume candles after you see a green vector. We haven't necessarily seen that on the 4-hour time frame, so you might see a stop hunt rise before we drop as we attempt to go a little bit higher here to stop out the shorts and create the double top scenario. Let's go. I think that's good for the liquidity pools for now, but there's a large amount of liquidity below, about 20 billion in long liquidity. Let's go to the higher time frame and see what got taken out on the heat map.
Fatality.
Yes, the shorts got taken for a little ride today, but we were not part of that painful journey for them. Let's go ahead and see. How's everyone doing out there? Boom. It's 3 a.m. my time. I just decided to do a little bit of trading of NASDAQ first. I wanted to get in the zone with that before the stream, so first things first, I prioritize that. Apologies if you're waiting for the stream, but better late than never. Let's see if this loads properly. Come on. There you go. We don't need the 12-hour one. Let's go to the 7-day. So the 7-day and the monthly did have that imbalance to the upside we talked about. So we talked about this imbalance to the upside, which they came back and ate into with the Fury. So on the 7-day time frame, this pool has been tapped. We do have more that is up here, but it's very sparse. Although on the 7-day time frame. So we talked about going up to come down and the idea of the higher time frame narrative. What does that mean? Well, as we expand our vision to the higher time frame pools on the monthly and above, you'll start to see the liquidity pools strengthen down below. So let's go ahead and see where those pools lie, if this will load properly. Boom, boom, boom. So we got a smooth 300. I wanted to get $333 profit, just despite some individuals out there. But yes, I wanted to get 333, but I was off by $1. Okay, so let's see if it loads. So here we go. So we took out those previous 30 billion. We talked about the bullish divergence possibly spawning off of this $30 billion, which it did, and took us to the upside. Now, are we fatiguing here, or are we going up into these regions to paint the narrative to 34.8, which the pools we showed above existed at? Or are we coming back down to stab into this liquidity down below? On this time frame, the monthly, it is ambiguous, so I will be using this one as my frame of reference because I like ambiguity, so I don't get biased one way or the other. So I will use this when I come back to it. The monthly is the ambiguous one. But as we expand to the higher time frames, you do see that there is a lot down at 22.4 and at 25K, the hundreds of billions still here. There is an imbalance to the downside, and it's caked up quite nicely to come back down into this region. That would be the shoulder, head and shoulder idea I told you, as we start to see that expand to the higher time frame and suggest an imbalance to the downside still existing. Same here with the 6 month, you see that imbalance still existing to the downside. So could we retrace down into the 22.5 region for that 100 billion getting quite thick and yellow, $83 billion down at 22.5, and there's a journey to get there quite nicely caked up. So this was a nice stopping volume candle. We've saw that before here where it stopped up to go down. So are we doing very much of the same? Nothing is guaranteed, but it's interesting to note as we go into the yearly time frame. So this is where the narrative starts to see, oh, okay, there is a journey that could be had to 34.8, and not discounting that upside momentum. But in order to get there, you have to eat through pools of nothingness, and is it worth that journey? It all depends on with the shorts they need to stop out are important or not, important pools or not. As of this time frame, it's not showing a huge amount of liquidity up there, and we're seeing a large amount still down here. The even Steven range on the yearly, basically the 6 month is the one that shows the heat for that downside idea, sub 19.4. So could this midweek reversal Thursday is just around the corner, so we could see some sort of shift occur in that as well. So we're going to go to our regular fib charts and start to see that occur. So we previously did a bearish trend based fib extension tool. You do 3 clicks, the impulse and the retrace idea. That 236 happens to be exactly where we wicked off. So that's kind of interesting to note. If we wick off that, if we don't get a candle to close above 30,042, then the bearish trend-based fib extension level is still in effect, and you could come down into these regions at 29k, and then if the trap door to 29k doesn't hold and this 65706 region doesn't give you a bounce of some nature, then that trap door could open to the downside down to these pools as well, and that would put you at the 1 level quite nicely to end that support of the daily test of the support. So could you see this come down on midweek reversal and then run for profit V to the downside as everyone had hoped? That could be the case. You never know. Or we could W formation out of here and go grab that 34k and keep the bullish narrative going strong. I'm not going to keep a bias one way or the other, but I do have that short open into 2% profit at the moment on 5x leverage. And let's see what the time frames of the indicators are holding. Let's turn on Momentum Master. What is Momentum Master? We'll link in the description for more if you haven't heard of it. MomentumMaster.info. You can scroll down to features, toggle it at your leisure, and see each of the components in their glory, read about them, see whether it interests you or not, and join the many funded traders that are growing day by day in the Discord. So, as you see happen time and time again, the cloud will break through the cloud, it starts to thin, and then you come back for that retest of the cloud. Now, this was a cleaner picture of a thinning of event, and then we burst through the cloud. Here it was still kind of thick. The one overtone we had going for us was this baseline cross on the 4 and the 6 hour. We talked about, I'm not interested in shorting this because this baseline is still holding strong, and we talked about that liquidity grab which got bought back, and we talked about the bullish, objectively bullish hammer region. How do you measure that? Well, you take a fib retracement tool and move it in the direction of momentum, and if the 3-8, this was not the candle though, we were talking about it back here, and this candle falls within the 382, that's a bullish idea. And so when they came down for the liquidity grab here and you held these baselines, you could have taken that idea for the long, even though they gave the impression of weakness here on the 6 hour. And we were talking about the 6 hour getting overbought, and it was the 4, the 6, the 1 hour versus the 12 and the 22, and guess who won? The 12 and the 22. My treasured 22. You never hold back on that. So you had the rising sun event. You're just getting started on the momentum here, which is opening up quite nicely. So you could see this pin to the upside if you were going to make that narrative to go higher. The one thing to note is this thinning cloud. If you get sold off into this and this becomes a rejection wick on this in 5 hours, so if this sells off into this and becomes a wick, then that you could consider that your bearish retest to the downside. Where have we seen something like that before? Maybe not in the same manner, but you did see a bearish retest here and then dip down below, and that was your shoulder, head and shoulder to the downside. So are you going to see something similar of note? Who knows? You might go above the cloud and fade beneath it. We're already seeing that shift in the cloud structure here, so that is a amount of momentum to stop here. So if we close beneath this 29,215 level, you could take that as a sell-off wick of note. But looking at the 6 hour time frame, you do have a thick cloud to contend with too, and to come back and kiss down into that as it starts to shift. So if this was a bullish narrative, you would expect this to start to curve out a little bit and become thin, and then we would come back into this to kind of kiss the cloud and then see the bounce. So for me, longing here is not the idea. Some people might see that as interesting, but I see that as a premium level, which I'm not interested in buying. I'm interested in selling, hence why I'm in a short. So that's what we do. And we saw the liquidity pools to suggest that. The cloud is suggesting it needs to curve a little bit and chill out as we come down into it. 6 hours overbought, as is the Williams, and we go to the 4-hour time frame. 4-hour also overbought, money flow and RSI coming down with the Williams here. Volume chilling out for a bit. Let's move this a little bit closer here. 527. Let's make sure this is 527. Let's just keep it there. All right, we'll just leave it there. All right, 527. Can't do it for the life of me, whatever. All right, so 4-hour time frame, we burst through that cloud. The cloud is starting to shift, so this momentum could continue here as you start to come down. The tapering of that and the angle in which that it rises here will be interesting to note. Looking at the hourly, it's already doing that, so it's front running what you would see for the 4-hour to continue. And so it's coming back to that level. Still kind of thick on the momentum here for the hourly time frame. You are getting the cross down event, and when these things cross down and lock into position as it did on this candle, you start to see that come with fruition to the downside. So we might lock in something at some point or put stop into profit because we're about to go to bed. And yeah, let's take a look at the 15 here. Whoa. All right, so we also had the cross down event here, which confirmed, and that was what on this stop hunt rise we decided to enter a little mini short there, and we've just been chilling in profit while we were scalping the Nasdaq. All right, so let's go to the 15. The 15-minute stochastic is oversold. You're getting the Williams to come down like a duck-billed platypus here with the beak open, and then it's going to suppress that most likely. And you see this come down a little bit further as it has more liquidity to chew on down below at the moment. Particularly the 100x guys and the 50x guys could stand to get knocked out of the trade for that long idea. So this is what we're seeing. We're just seeing the baselines cross over the price like this and kind of suppress it, similar to like something pushing it down. And the same thing you would see on the opposite side. Now this happened here, and then we got the push up, right? So when to short and when will it surge up in your face like this? This is when you look for bullish divergence, and here you had hidden bullish on the money flow here. You are getting hidden bullish on the money flow back here, and the money flowed back in, and we didn't really go anywhere. We had just somebody sell off their order here. And so you got to take a chance at some point, but that's just not the level where I'm looking to long personally. And yeah, you got this bullish divergence appearing on the 5-minute here. Some volume stepping in. It looks like it's a stop hunt volume candle. And yeah, generally when you take a short, like let's say you managed to snipe that short up here, all right? Let's just say you were a boss and you took that for whatever reason, and you started to dump down out of this. Chances are you're going to see a V-shape, because in general you see double tops and double bottoms. So before you truly make the move to the downside, if that is the move you're going to make, you see a double top. And not only that, ooh, I almost knocked my coffee again. So Not only that, you'll see like 3 hits to the high. What do I mean by 3 hits? Well, you'll see like 1 hit here, and then you'll see a second attempt to hit the high. Is this it, or is it still yet to come? And then you'll see a third attempt. And so you start to see a region where you want to see these hits to the high occur. And this technically was not really a hit to the high unless you want to consider this the high, and this region is part of that, in which case you can lower this down into here, and that would be your kind of short region idea. And then you look for that third hit, if that is the case, for it to fade, and you look for some bearish divergence to form on some of these time frames. All right, so let's look at, I know Renier is really into the cumulative volume delta and the open interest. That's definitely a very valid strategy. I can only keep my brain focused on so many things at once, so that's one thing I don't use, but it is completely valid if you're looking for that sniper entry for sure. And then this indicator will give you the leading idea of this suppression. If we can't maintain a candle above this baseline, then you can expect more downside. Just plain and simple. It's kind of guiding you down. And it shows you where those fatigue points may occur. So after a large move like that, you could just go sideways too, and then London or New York session we go down too. So we might just see a consolidation range of doing much to do and nothing, and then people get bored and then they decide to make a move after that point. Midweek reversal doesn't have to occur as violently as it occurred to the upside. It can meander around and then drop. One interesting indicator you can check out is Thursday. Where is it? Here we go. Type in SMT Smart Money Thursday boxes. So you can go back and back test what happens on Thursday. Thursday is generally like a mid-week reversal day, so you can go back and test each Thursday and what happened on those days. Let's go back to the hourly time frame, and then it will basically put these boxes around what happens where you have these drops, or sometimes consolidations, but eventually drop. And so you can go back and back test what happens on Thursday. This is why they call Thursday midweek reversal. So we were going sideways, and then Thursday dumped it, and then Friday ran for profit to the downside. So we went sideways after a move to the downside on Wednesday, on Thursday, April 20th, and then Thursday, about the Asian session, they dumped with a fury, and London kind of continued that, New York continued that idea and continued into. So it's just interesting to note. If you're interested, check it out. All right, so we did get that confirmation of that cross down event on the hourly. Does that mean anything? We had that here, which got immediately negated. And you did have meandering around here as we dumped down. But these things are what you use to find those. You have to take a chance at some point. Whether that succeeds or not is all dependent on your risk management. Okay, so I think we did a good narrative of the liquidity and what lies below on higher time frames and lower time frames. And we went into the idea of the power of threes, which you can Google more about or YouTube more about, whatever you want to call it. And this dotted yellow line is a daily level of resistance. Let's go back there and see what that did. So we'll go back. Why is this dotted line on my chart? So I only put lines that are daily levels. So we had breakthrough, resistance, breakthrough, attempt to claim support, and then drop down. If I go to the daily time frame, you'll see more touches here, but this is basically a daily support and resistance level that we could not reclaim. We got rejected off of, came back, rejection, bearish retest, rejection, another bearish retest, drop down. So this one we also tried to claim as support at some time too. So we're at that daily support and resistance level, which is interesting to note. All right, so yeah, it's basically leading up to midweek reversal. And what do you expect to see? Well, before any real reversal, you need to see an extended, or you need to see M patterns. So once again, this has not yet to have that second hit to the high. So you got that first hit. Where's that second hit going to occur? Are we going to reach up into these regions and do an extended M and come down? Who knows? Stop out the shorts before they eat into those long liquidity guys. This would also eat into that vector candle over here, fair value gap over at 30,257, and then come down. So you might be able to get that nice entry, but we did have that cross down event on the hourly, and you look for that to cascade. What do I mean by cascade? Well, you go to higher time frames and see, did it close with that cross down event, that leading idea that has you at hello before the move occurs, similar to here. Are you going to get it on these time frames above as well? The moving averages have yet to get there, so it's not going to occur there just yet. All right, well, that's a little quick market update. I'm ambiguously short at the moment. I'm not really sold on the idea, as it just ate back into 1% of my profits. Considering to think about whether I want to keep it open overnight or not. I might just reassess in the morning. The pools do exist down below here, so might put like a limit order up here or something, but I don't like doing that overnight if I'm not awake to see it. We'll just leave that there. We'll see how it fills out tomorrow morning. Sometimes I'm pleasantly surprised, so we'll leave that there. Well, that's the idea. Basically, a retrace into the liquidity that of the nice move to the upside is not abnormal to see, particularly the 50x and 100x. And the baselines had you at hello, so I'm going to trust those indicators of mine. So coming back into these 300 and 280, nearing $300 million pools seems to be the play for the moment, at least in the interim. Of the retrace idea seems valid. So you're getting oversold on the 5 and the 15, so you could see another bounce for that double top scenario, but that's not my cup of tea for taking as a long. Personally, I took my play. I'm happy. So finding that double top is where I want to find that juiciness to rest in profit on. And that's about it. So somebody was asking about Matic in the Discord for Rainier. So I'm going to go over Matic really quick. What? Oh, I'm on the futures, that's why. Sorry. So Matic is basically, they were talking about the cloud on the 15, I think they were looking at. So the 15-minute cloud versus the hourly cloud versus the 4-hour cloud. So these clouds, you see, you break, it thins and then you break through it. And then it's kind of thick, you get rejected, thick, you get rejected, and then you eventually make a move and break through it, and it starts to thin, and generally you come back and kiss this cloud. But let's go to a 4-hour time frame here. So you're starting to see that curvature in the Matic 4-hour cloud here. So you see, whoops. So you see this kind of curving nature to the cloud that's already starting to front run that curve, and that angle is starting to thin here. So as it starts to thin, you generally come back and kiss that, and then you're gone for that move out of there. And that comes back to deal with the liquidity here. And similar fashion, you had this thinning nature. You came back, you didn't exactly go on the cloud to a T, but within that outskirts of the cloud, you did see that kind of bounce up out of there, and it did meander around a lot here on the 4-hour time frame. But you just have to go back and back test each coin. Each coin has a different personality, and so some Matic might not bounce directly on the cloud, but the ATR instead. So you're gonna find what works in that asset. Each asset has its own little idiosyncratic behaviors, but a lot of these things will hold true. Like this, you broke through the cloud, it thinned out, you came back, you kissed the cloud, held the ATR, and you saw that upside momentum. So this would have been a higher probability play had you held this ATR. So there's like higher probability things that can play out, and do you make that criteria occur all the time? Not necessarily, but if this ATR holds and you come up to here and this thins out in such a manner, you might be able to find that if you miss this play. But the cool thing is you had that rocket ship right there that did play out thus far. So sometimes these rocket ships on the altcoins might give you a leading idea to Bitcoin too. I remember spotting the rocket ship on Total at around December 29th on the 3-minute, and that was the literal bottom of the market. So you never know, you might be seeing that rocket ship that takes off just before a move for the entire global economy on Matic. So that was interesting to note. But yes, the lower the liquidity, the more wonky and the less accurate these tools will become. So somebody was looking for a kiss on this cloud idea. So the lower the time frame, the less secure these confirmation bounces are. And you've already seen like 1-2 rises out of this. So yeah, if you hold the ATR, maybe you could see a bounce, but this is just too premium for my taste. It's not discount enough. Down here with the rocket ships, that's a beautiful discount level, and it doesn't seem like it at the time because you seem ultra bearish, but that is where you establish a long or consider one. Not financial advice, of course, but that's paper trading where you would want to consider a long, because that's where you see the explosive move. Here you might see yourself get trapped and dragged to drawdown hell, which is not where I want to be, especially with the baselines crossing down on you. So you want the things in your favor. You want the baselines crossing up with these symbols, and that's where you take the long. With the thinning cloud, if you zoom in here, the cloud was thinning, you broke through and you retested on this 15-minute here, and that was where you want to find that long position if you missed this move. And so is this the same thing? Not really, because you're already kind of exhausted. And while this does show volume and everything like that, you're on the outskirts of the Keltner channel, which is the ATR based Bollinger Band, and you kind of have to come back down to it. And if you look at this as an average of those overbought and oversold ideas, like you could just come back down to the bottom and kiss this adaptive moving average for support. And so if you were looking for a long, it would be also using the fib retracement tool. So you take this fib retracement and go from that impulse, turn it into a pocket level, and look for a 618 bounce if you are considering that idea in this pocket. But here is not where I would be looking to FOMO in to anything personally. But yeah, this is where I'm talking about when I talk about the thinning of the cloud. And you can go to Momentum Master. This pattern appears all the time. This is the literal bottom of Bitcoin, and that's why I traced it, because before I even knew it was the bottom, because that's what you see over and over again. This schematic is what you want to look for, and that thinning of the cloud where you burst through it and you kiss it after bursting through and it starts to thin, that's where you get in. You see what I mean? So right there, that's the same thing on Matic right there. Even though this is March and I made this thing in January, it's the same. I copied the price action from November actually, but I made it way back from November, but I made the website in January. But it's the same concept. You break through, you retest, you're gone. And that's your higher probability thing is down here when it's starting to shift from purple to blue, It's already blue, so the move has already expressed itself in my mind. It's kind of fatigued out. Not where I'm looking to long. You're looking to monitor your short and see, yes, it's breaking as you guide yourself into profit with the short idea. So that's where you start to shift your narrative. And if you have trouble doing that, shift your charts the other way, invert them and try to play it the other side, bullishly or whatever. All right, well, I'm fading because it's already 3:42 a.m. my time, so I just wanted to do a quick market update because I didn't do one earlier, so just keep you guys informed. If we are holding this and falling back into this as well, the same thing could appear here. I'm always frugal and weary of, even when I'm in profit, I'm weary of it shooting up in my face. So I always protect myself at all times in order to maintain this consistency here. This is over the last 90 days. So, back in February was where we had some losses, but since then we've been pretty good. So, consistency is confidence, and it's good to be consistent. So protecting yourself and your entry at all times is the idea. And finding those smooth entries which slowly drift the price down, or finding those smooth, long entries which slowly drift the price back up, which was happening. Even if you're in drawdown on that long, until you have broken that baseline, you were not really bearish. I think a lot of Momentum Master guys were pointing that out too, is this was a very strong support that you don't want to really short until you break it and bearishly retest it. So, all right, well, that's it for me in a nutshell. That's my story, and I'm sticking to it. Thank you for everything. Let's see, went long. Yep, Momentum Master Army went long yesterday. Gains, yep. Danny, you're hilarious. Would you mind turning the music down a bit? I'll consider it after the stream. I might adjust some levels. Definitely looks like it could be setting up for a BART. BTC7 looks like nice on the indicator. 7 minute. Let me look at that. Nice for a long. Let's see. You were looking at this bad boy before it was coming up. Or what? I'm trying to understand. Hold up. But yeah, you're seeing the shift of the cloud here, which is showing the volume fade. This is a volume weighted formula. So when the volume starts to shift against that narrative, then you're starting to see that bearish overtone. So it's kind of coming back in here, but yeah, you're still holding the ATRs. Until you break that, the trend has not been broken. So this trend-based ATR level, even when we wicked down to here, we maintained it. And here we maintained it. So unless you break this level at 29,642, then we could still see a bounce at some point for that extended M idea. Yeah, you're asking how it works in general. That's great. Yeah, ask away. That's why I stream every day, as I'm here to help you guys try to decipher as much as you can and glean some strategies. Like, there's people pointing out stuff to me. So, like that cascade of the 6 and 8 hour cloud, like the 8 hour cross down events. That was one of the members in the Discord pointing that out to me, and then when we caught this one cascading, I was like, man, I'm sold on that short idea, because the 8 hour is strong when it crosses down like that. And then it was just pure downside from there. And then we had the cross up event, although a bit wonky and sketch with this liquidity grab to that 30 billion down there, it was still confirmed. So that's why we saw that upside. So you don't want to mess with the baselines, not at all. which is why a lot of guys in the Discord tone down their candles so they can keep this in prominence in their view. So you're welcome to customize as much as you like. You can go into your settings and tweak around to find the schematic you like to use. So we're getting that 1 hour cross down event. Is that going to play out? It could. It got negated here because that was our first leg up, but this is the second leg up. Eventually it does play out, so you got to think about taking one of them at some point. All right, well, that's all the time I will give for today. I appreciate your time, so thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part and keeping you and yours going to the upside, and we'll do the same and bringing the fire every day and the accuracy and the precision. So let's keep it at it together and let's burn bright and hot. Peace.